Hello traders, welcome back. In the previous lecture, you have learned the basics of swing points in a trend. And in this lecture today, I will be talking to you about the basic structure and method of standard risk and reward ratio model. This lecture will show you the standard structure of risk and reward ratio model, which you can use in almost every strategy you will find. Risk and reward ratio is basically being used for forex and stock market trading. Without the understanding and managing the risk of your trading, it is nearly impossible to earn consistent reward in your trading career. So let's start knowing what are the risk and reward ratio model is and how to apply that in your everyday trading checklist. So what is the risk and reward ratio model? When you aim to invest your capital in certain trade of a security like forex or stock to have a certain amount of profit from the trade as return and the amount you are agreed to take risk as a loss if your trade goes against you, then the mathematical ratio between the size of the risk and reward is called the risk and reward ratio model. Let me give you an example of this. Let's say you have opened a trade at $40 market price. You expect that the price will rise at $60. Now you are willing to have $20 return as profit if price goes in your targeted direction, but there are chances that the price will go down and make you loss. So you will tolerate until market price goes at $30, and if price touches 30, then you will close your trade by taking $10 loss, which means you are willing to risk $10 to get $20. So your reward is twice the size of your risk. That's why your risk versus reward ratio is 1:2. Again, if you wish to have $30 profit per share using the same $10 risk, then the market will have to rise from 40 to 70. That will give you a reward of $30 against the risk of $10. That means you are using 1:3 risk and reward ratio model. But remember, you should never trade on something for getting same amount of reward as profit by taking the same amount of risk, which means your risk and reward ratio should never be 1:1. So never trade to get $10 by risking 10. Always put your invest on something which gives you profit for at least double of your risk. Your risk and reward ratio can be extended by up to 1:10 or even more with swing trading. That's why I personally like trading the trends. You will learn more about this in later lectures, but I am signing off for today. Hope you guys enjoyed the lecture. So see you in the next class. Goodbye and have a nice day.